Welcome, house hunters. Just wanted to continue our series on down payment assistance. So this is down payment assistance part 2. We're going to do something a little different today. We're going to talk about a 100% financing, an actual loan. It's called USDA. So I'm Yvonne Hunt. Here's my favorite lender, Dave. And we are going to talk to you about USDA. So Dave, what makes USDA unique and different from the other down payment assistance
USDA.
program?
So the first thing you want to look at on a USDA loan is, a lot of people have never heard of such a thing, right?
Right.
A lot of people live in the city. This is a loan that's derived for rural areas, outside city limits, basically looking for populations of 35,000 and under. Those populations are driven every 10 years by the census that they do here in the United States. They go and take a look at how much areas are growing. And if it gets over 35,000 or so, that's the benchmark, then they're going to go ahead and, push you out of this USDA bracket. But this USDA loan is 100% financing. So it's not really tied to a DPA like we've done in the past on those videos. It's 100% financing. You get financing for 100% of the purchase price that you agreed upon. So the reason we sort of put it in that category is because, again, it's low to no down payment, which is what DPA usually falls into that bracket of.
Right.
So 100% financing. You're still going to have to watch and look for paying closing costs. So you are still going to need some funds in reserve on your own. However, this gives you one straight loan without having to, say, on the other DPAs, put a second or a grant or something onto the back end of your title as a lien that sits there until you decide to pay it off or however that down payment assistance is derived. One straight loan, you're going to need some assets. There is income limits with this program. Okay, so it goes off of household income, not who's qualifying. It's total household, how many people are going to be in the household, and then there's a limit to how much money you can make. So typically 1 to 4 people in the Georgia Atlanta area is going to be about $110,650.
Wait, 110,000. You can make 110,000.
Yes.
You're 2 school teachers with 2 kids. You can make up to 110,000, right? You're a single mom with 2 or 3 kids. You can make up to 110,000, which in a rural area is pretty doggone good, if you ask me, right?
And once you get over 4 people, you start on that 5th person in the household, you're up to 146. So
wow,
it jumps.
That's a lot of money to qualify for 100% down. Again, this is not down payment assistance. This is a loan, 100% finance. You still don't have to pay a down payment, right?
That's right.
Right. Okay. So how do you know if the home you want to buy qualifies?
So, good question. How do we know? So you're going to have a website that USDA has on the internet that you'll go in and put the address of the home you're looking to purchase into that website, and it's going to tell you if it's in an eligible area or not.
Okay, so I'm going to put that down below so that you guys can cut and paste or click on that link, go and put in the address. What if it's new construction, Dave? And they don't really have an address?
Because you may put that in and it says, we don't know what you're talking about.
Right.
They don't have somebody sitting there at the USDA office putting every little thing in. They keep it as updated as they can. However, what you want to do is get a little savvy, find a street really close or a business really close to this new construction subdivision, get that address, put it in. Chances are if that comes up as an eligible address for USDA, then that subdivision will be as well. Okay, so I used to use this trick. I used to put in the nearest dollar store, right? Or the Food Line or the Walmart. I don't care. Walmart is everywhere. So put in the nearest Walmart if it's within a mile or 2, right? And that's radius. So that's pretty far, believe it or not, as the crow flies. So that would probably work. But, if you're just curious, you can call me, you can call Babe, and you can, we'll sort that out for you. And the odds are, at the end of the day, if there's any question, the subdivision itself is going to know if it's going to be USDA eligible or not.
Yeah, it would behoove them to know, right? Yes. Remember how we wrote all those back in the day when I was sitting for that builder?
Very much so.
Oh my goodness, we were in Jackson County and we were writing USDA loans left and right. Why? because it was a better loan and the income qualification, that was 10, that was a long time ago.
Yeah.
But anyways, income limits are higher now than it was then.
Yes.
So people would come in and they'd have money for their down payment. They had sold their other house. That's another thing about USDA. You don't have to be a first-time home buyer, right?
You don't. And you don't have to use 100% financing. If you got some money you want to put down and maybe USDA is a better interest rate, better overall loan for payment-wise, you can still utilize the USDA loan. You don't have to say, well, I'm going to put down 10, 20,000. Bring it.
Bring it, right? That's just less for you to have to pay off.
Mm-hmm.
So, Dave, I remember back when we were doing a whole bunch of these, that they actually got the $1,000 earnest money back.
Yes.
Do they still do that at closing?
You can still do that, yes.
Okay, mm-hmm. So you put $1,000, $2,000, $3,000 down as earnest money. That's your promise to pay when you write the contract, right? USDA gives you that back because it's 100% financing. That just used to blow my mind. Okay, mm-hmm. You still have to deal with closing costs, right?
That's correct.
Okay, so make sure you have enough money to cover your closing costs just in case. Now, if you have a good realtor like me, I'm going to ask for closing costs and we're going to make that work. But still, if you have a couple $1,000s and you want to buy a home and stop paying rent, you can. So my question from my subscriber was, can I buy a mobile home? I'm thinking about buying a modular home. I was like, I believe you can do that with USDA.
Yes,
is that right?
Yes.
Oh, wow.
Those types of properties are very popular with USDA. If you're doing a mobile home, it has to be what they consider new construction, so it cannot be a resale. They want to see that it's brand new on a new permanent foundation.
Okay. So if you see a house that someone's in a trailer, got to make sure they own the land. Of course, your agent is going to make sure that, at least I am, to make sure that that person that's in that trailer is the actual owner of the land. Well, you don't have to even worry about their old broke down trailer. You can go get a new one. And I've been looking at some double wides. I was shocked when I found out how nice they are.
I've seen some online that I could not believe.
Right?
Just 15, 20 years ago compared to now. It's luxury living.
It really is. Granite countertops, beautiful, cabinets, nice open,
floor plan.
It's kind of groovy, right?
Yeah.
Not a fan of, that's not my thing, but if it's something you would consider, or a modular home, there's plenty of people out there, especially in Georgia. Every time I go south on 75, I see a place where they have modular homes, and you can walk in there and you can tour the modular homes that they do. And then they bring that puppy out there and put it together and bam, it's on your land. USDA all day long. So it's one I wanted to cover. One, because specifically a subscriber asked. So, hey, Miss Mallory, this one's for you. But seriously, there's a lot of people out there that are trying to beat the high cost of rent these days. And once you have that 30-year fixed USDA loan, what do we say that stands for?
United States Department of Agriculture.
USDA, same people that certify me. Yes, they do loans too. So again, great program, 35,000 people or less.
That's the rule of thumb, yes.
Okay. Mm-hmm. And it's based on the house that or where you're going to live.
Yeah, the house you want to purchase.
Right. Check the description down there. It's going to be all the information you need. Cut and paste it. If you get on that website and get confused or it doesn't say anything, give us a call.
Yeah, you're also going to, we didn't talk about credit score. So with this program, you need at least a 640 because we run it through an automated underwriting system that is actually a USDA underwriting system.
Okay.
It's not one of ours that we have in-house.
Okay.
And you need a 640 or better to at least do that. Now, if you're under 640, there's a couple things we can do. We can take a look at your credit score, analyze what's going on there, help you try to build those scores back up in order to get into that automated piece. If you can't, USDA does allow manual underwrites for under a 640 score. Mm-hmm. When you deal with manual underwrites, there's a lot more that's involved in it, a little bit more restrictions. Okay. So it's a little bit harder to get you approved. I'm not saying you're out of the game under a 640, but if there's a chance to get there, it behooves you to try to get to that 640 first instead of trying to do that manual.
Well, and here's the thing. Dave and I have been working together for so long. We have had people that came to us that did not qualify. Dave gives them specific instructions on what to do. They do those things. They submit their paperwork to Dave, and then you do a rapid rescore. You deal with the credit bureaus, right?
That is correct.
And you make sure that now all the stuff that they've done, and we don't have to wait too long, right? He can actually get it done for you, probably faster than you could do it yourself. So I would say don't be afraid of your credit score. And maybe we should talk about the fact, because I had this come up just today on my way here. The guy said, I thought my credit score was this, but then when I had them run my credit, the mortgage company came back and said it was lower.
Mm-hmm.
What's that about?
So this is something that we deal with all the time, right? Whenever you go out to buy a car, apply for a credit card, there's different scoring models that are used for your credit reports. It depends on what kind of product you're out there buying. Mm-hmm. We use a FICO score 8 here in the mortgage world. Mm-hmm. Mortgage credit reports are always a little bit more thorough and a little bit more, they dig a little bit more deeper than you're applying for a credit card or a car loan. So therefore, you're going to get discrepancies in your credit score itself compared to other things all the time. Hey, hello, my Credit Karma told me this. Well, Credit Karma, is trying to, they have their own algorithm. They're trying to guesstimate what your credit score would be based on everything you have out there, balance-wise, how many lines of credit you have, that kind of thing. So they're always a good indicator. I tell folks, hey, if it's moving up, that's good, because chances are it's moving up in my world. If it's going down, chances are it's going down in my world. But, when you call me and tell me you have an 800 on Credit Karma, I can tell you 9 times out of 10, or actually 10 times out of 10, that's not what your score is going to be.
Okay, so don't be afraid of it, right? Mm-hmm. Whatever it is, we can advise, he can advise, and tell you what you need to do. And then once you've done that, he can rapid rescore you, and then you can get the ball rolling. So again, thank you for your time. Thank you for checking in on my channel. Really appreciate you. Like, share, subscribe if you haven't already. And look in the comments for that USDA link, my contact information and his contact information. But again, please do pick up the phone if you have questions and call. If I miss you, text me. My number is 404-587-5661, and Dave's is 404-925-3128. Thanks for your time. See you on the next video.